It is my pleasure to moderate this exciting panel on the principles for responsible banking in action today. For those who don't know, the UNPAB are the world's foremost sustainable banking framework, and they're designed to ensure that bank strategy and practice align with the vision that society has set out for its future in the UN Sustainable Development Goals and the Paris Climate Agreement. And they have also recently celebrated their 3-year anniversary. Please welcome me today with me are 3 renowned panelists. We have Tanya dos Santos with us. She's the Global Head of Sustainability at Investec. She's been with Investec Group since 2001 in different roles and is currently the Global Head of Sustainability for Investec Group. Tanya is also passionate about human rights and sits on the board of for example, the UN Global Compact local network in South Africa, but she also represents Investec on numerous committees, for example, the UN Global Investors for Sustainable Development Working Groups or the Bankers Association of South Africa Sustainable Finance Committee. We also have with us Amanda Lee. She's Executive Manager ESG at Suncorp. Amanda joined Suncorp, which is a regional mid-sized Australian bank, in 2019. And as the Executive Manager ESG leads the bank's sustainability strategy. And this is also responsible for delivery of the ESG program, which includes implementation of the UN principles. Amanda has a business degree in financial planning, an MBA in social impact, and 20 years experience in banking and wealth. And last but not least, we have Yvonne Holmes with us. She's the Chief Sustainability Officer at AIB. She has been at AIB for more than 20 years in many different roles. In her current function as the CSO, she has responsibility for the development and implementation of the sustainability strategy across AIB Group. And Yvonne is also a member of the Chambers Ireland Sustainable Business Council and is the chair of the Sustainable Finance Skill Net. So thank you to the 3 of you for sharing your experiences with the audience today. To get started, what we'd like to discuss first is what have your experiences so far been? So Suncorp and AIB are both founding signatories of the principles, therefore can look back to more than 3 years of implementing the PAB. Investec has joined in August 2020. So you all have made substantial progress in implementing the principles in the last 2 to 3 years. And my first question goes to Amanda, because Suncorp has been very active in many working groups and also critical processes of the principles, such as the framework review. Amanda, can you share some experiences with the audience, how that spirit of collaboration has guided you, or maybe even has translated into action within your bank?
Yeah, thanks, Johanna. It has been a pleasure for the team to participate in the working groups. Since becoming a signatory, we started in the Impact Analysis Working Group, I think in 2019 and 20. We did the Resource Efficiency Working Group last year, and then this year the Task Force reviewing the framework, the Biodiversity and Nature Working Group, and the Financial Health and Inclusion Working Groups. I think these working groups, they just provide such a great opportunity to build capability, but also to build awareness of the actions that are being taken in other banks. You mentioned we're a regional bank. We've got a very public commitment to sustainability in our ambition. So building confidence and learning from others is crucial so that we can accelerate that action and do it in an efficient way. And I can't impress enough the role of the working groups in achieving that efficiency, because it enables us to shift into action faster than if we had done it on our own. If I take the early impact analysis working group, the deep understanding that this enabled us to provide our executive very early on in implementation of impact and the role of impact analysis progressed the integration of impact into our strategy, into our ambition. Our primary impact areas were very early identified as climate and healthy inclusive economies through the UN's impact tool. And that then translated directly into our ambition pillars of sustainability and well-being. And they now drive every decision and every action across the entire value chain for the bank. I think following this, the role of the resource efficiency working group's another really interesting one to look at for us, because it helped us to consider the data we would require and the customer engagement that we needed to progress with development finance customers. But more importantly, what it caused us to do was really consider what our next most significant impact area was. So, we're a bank, so climate and financial health were no-brainers. They were clear, arguably most priority, but trying to identify that next impact area was a little bit more challenging. But both that working group, but then, the subsequent analysis we did allowed us to then say, well, how should we be thinking about prioritization of impact areas? Being able to have those discussions with others having same challenges as us, learning from others who might have had a deeper impact, meant that we could shift our focus this year to biodiversity and ecosystems, and the impacts that they drive in the portfolio.
Thanks so much, Amanda. And I can only emphasize what you said in the beginning, because this is at the core of the principles, actually, that spirit of collaboration supposed to be helpful for everybody, because only together we can solve the crises that we're currently facing, the triple planetary crisis of climate change, biodiversity loss, as well as pollution. Now, of course, when we get into implementing the principles, what a bank needs to do first internally, strategy and governance, of course, come to the agenda and are super crucial here. Tanya, Investec is one of the PRB banks that, for example, have a strong governance mechanism in place, like an engaged board in climate discussions, or a framework to link remuneration of executive directors to ESG criteria, to name a few. Can you maybe share with us or with the audience how your governance structures have helped you implement the principles? And also maybe shed a bit of light on what was particularly helpful to set up the governance in your bank.
Sure. Hi, Johanna. So I think what was fortunate for Investec was, while we weren't one of the initial founders or advocates of UNEP FI or UNPRB, we were already on this climate journey and had been on the sustainability journey for many years. So we had already signed up to the TCFDs, and were starting to understand that TCFD framework of governance, strategy, risk, and target setting. And actually, when you really get to grips and start to look more in depth at the TCFD framework, you see how closely aligned it is with the UNPRB principles. Those principles are deeply embedded across the TCFD. So it was almost an easy thing for us to, get executive over the line and say, we need to join this commitment. The strategy, first and foremost, had to acknowledge, that climate change is a risk and an opportunity. And for us, it was a tricky one, because it was at a time when everyone was just, signing up to every commitment possible. And we wanted to show, how do you really demonstrate that you're not just doing this as a principle, that you are actually going to take action. We were very fortunate. Our structure at Investec is very flat. Our CEO really leads and guides our ESG agenda, but in particular, he is personally connected to climate and to inequality. He grew up in abject poverty, didn't have access to clean running water, didn't have access to any energy, never mind renewable energy. So for him, this is deeply personal. And everything we do is guided by that framework of, are we addressing inequality? How are we addressing climate change? And that's how our strategy rolled out from there. The principles of UNPRB are already integrated into how we operate. Our governance structure is very flat. We have a number of levels, but it's really top-down broad guidelines. This is kind of the realm within which we'll operate. These are the things we will or won't do. And of course, there's a lot of, grey in that, because some areas like coal and thermal coal are still not defined. But there's a lot of bottom-up responsibility. And that's the space that we've been able to play in. But I think the most important point is to ensure that that climate strategy, sustainability strategy, is aligned with your business strategy, and ultimately with your purpose as a business. and the rest comes.
Absolutely. No, thank you. And I really like the way you highlighted that personal dimension, because that's in the end what we're talking about, right? We're talking about human beings. It's not a conceptual exercise that we're doing here, but it always will touch upon the human dimension, and therefore people are affected no matter where they come from. And that is, of course, a very good motivator, I think. So thank you so much for that. Maybe let's move to the next point, and that is very much at the core of the principles themselves, because what banks, by signing up to the principles, commit to do is, as a first step, analyze the impact. And impact is the impact associated with the financing and investment activities of a bank. That means the impact that's triggered by basically the bank's portfolios. And through that impact analysis, signatory banks, they really come to understand then what's the greatest positive, but also negative impact as a result of practices and policies and also financing investment activities. And once this impact is, so to say, understood, this forms a baseline to identify where the greatest change can be achieved, and also where targets to manage these impacts need to be set. So this is a bit of a background about the impact analysis part. Now, Yvonne, maybe moving over to you, because AIB's work on impact analysis is currently considered good practice, with a very comprehensive work and good transparency also in terms of negative impact. So can you maybe share with us some of experiences from within your bank of how you, as AIB, have analyzed your bank's impacts?
Yeah. So I suppose we found the impact assessment tool actually to be really practical. We operate in the UK and Ireland, and we're one of a number of pillar banks in Ireland. That's where our main operations are. So I suppose what we found with the impact assessment tool was it gave that objective look at where our impact areas were. So we had, I suppose, been reporting for a number of years, and we had done a materiality assessment. So we had an assessment in place. And I suppose what the impact assessment tool gave us was a very much kind of quantitative foundation to say, these are the kind of priority areas that we need to be considering in terms of that impact from a country needs perspective. And that's what we found. So I suppose what came out was, waste and food probably came out at the highest level from a country need. But looking at our own portfolio, that did housing and climate action were
Yvonne seems to be breaking a little. Maybe we...
Did I lose you?
Yes, we lost you for a minute.
Oh, apologies.
But you were just, what we heard last is what the results of the impact analysis triggered by the pool were, but we didn't really hear so much about the impact areas. So maybe you can go back to that.
Yeah, so the two major impact areas that came out were climate and social housing. And from an Irish perspective, housing is an absolute major issue across the board. So we set about focusing on the climate action target first, and we set out targets around the percentage of lending that we want to be green or transition by 2030. So we're aiming for 70% of our lending to be green or transition by then. And we've set out net zero ambitions for 2040 and net zero in our scope 1 and 2 emissions by 2030. And we've currently just set science-based targets now for 75% of our loan book. So we started with a number of sectors last year. Our biggest sectors in the property area and electricity generation, and then finished our corporate loan book earlier this year and are currently getting those targets validated by the SBTi. And that is really, I suppose, fundamental in terms of setting out the pathway. So very clearly across the sectors, and those have been integrated into our financial plans across the different business areas. And then social housing, we've focused on that in last year's work, and have a clear fund that we want to have utilised in supporting our social and affordable housing objective by that period of time.
Thank you for sharing that. Very interesting. And also what is good to hear, that gradual approach, starting with this and then expanding also the impact analysis in terms of what portfolio was considered, because that's exactly in the spirit of the principles, that get started and then expand the work. Nobody can do 100% from year one. So this is very good to hear from you as well. It was mentioned a couple of times, climate. Climate is, of course, like one of the big climate change, one of the big crises that we're facing, but also the main impact area of PB signatories, or banks in general, I'd say. So we published a what's called collective progress report last year that actually made it transparent for the very first time. What are banks actually doing? What are the impact areas they identify? And the vast majority of banks focus on climate. So 87% identified climate as one of the areas most significant impact. Now, Tanya, Investec has, for example, identified climate, as many others. And you've also joined the Net Zero Banking Alliance, which is the climate mitigation focus of the principles and also an accelerator for climate target setting. And Investec is also the first African bank to set climate targets and disclose Scope 3 emissions. So, and that is a big step, especially considering the developing country context. So what enabled you to take this important step? And also, what are you planning to do? So what's your action plan to implement these targets?
Yeah, that's the problem when you achieve. Then people just put pressure on what's the next thing. You got to keep doing better and better every year. So Johanna, I think we were very fortunate. One, we had a bit of pressure from all angles. We have very strong shareholder activists in South Africa who are putting a lot of pressure on corporates, but also the banking sector around their financing of fossil fuels. So we had, that kind of knew that noise was going to come. At the same time, we were engaging externally with various stakeholders on these issues. So when we took a potential resolution to our board to say, this is what the world really wants to see if you are committed to Scope 3. They want to see what is your baseline, what is your strategy, how you're going to get to net zero. We've done our own little high-level analysis, and we think we can do it. You can imagine a lot of them were not really sure what you meant by, Scope 3 financed emissions. They didn't really understand what kind of work needed to be done. But it was a bit of a leap of faith, and they backed us, and then obviously the shareholders backed us. And that was, about a year ago. We then had about 7 or 8 months to come through on that commitment for our year end this year. So we were extremely proud that we managed to cover 68% of our loan book. And we started with those high-emitting industries, which, fortunately, we have a very low exposure to. But most of the work in this area has been done on those, high-emitting industries like the power sector. Our next biggest sector was actually property. So it wasn't as complicated as possibly some of our peers where they're looking at agriculture or some of the manufacturing industries. And property is an interesting one because there's so many positives at the same time that you're working out these negatives. And there's possibly more data available, from a property sector than there is in any other sector. So as a result, we were able to, take relatively reasonable assumptions. In the UK, where it's a lot more developed and advanced, our assumption levels are higher. In South Africa, they're lower, but that's our improvement for this year. You know, we said, it's okay, we're going to take a leap of faith, we're putting ourselves out there, we have no clue, you know, what stakeholders are actually looking for here, but come back and tell us, give us feedback on what you want to see. We didn't know if you're supposed to do it as a percentage of loans and advances, or, you know, what are the actual measures that stakeholders want to see. And it's only now that, you know, we've done it, that people are coming back and saying, this is great, but we want to see more. Or they're able to start comparing us as more and more competitors, and peers start giving the same disclosure. So what's next for us? First and foremost, to keep on improving our assumptions and our data collections, you know, listening very carefully to that feedback from stakeholders, and constantly revising that strategy and target setting. Because as new information comes in, that's how you then need to, you know, improve and give credibility to your plan.
Thank you. And that is so great to hear, you know, also like the approach you took towards transparency, even if you didn't exactly know what would happen, and also listening to stakeholders, but then getting the feedback of the stakeholders very much speaks to principle for as well, and also to, you know, the accountability mechanism that the principals, for example, have in place with a civil society advisory body that really advises banks, and is there to, of course, on the one hand, push for more ambition, but also bring in expertise and bring the different players into a room to talk to one another. So it sounds like you've done exactly that within Investec. So very good to hear.
Well, we're also very fortunate to have joined, you know, industry organizations like PCAF and UNEP, etc., who have opened up these types of discussions, and we're able to learn from our peers. And that's what I love about this space, because we don't have to do it alone, and we can learn so much from each other, and learn best practice from you know, collaborating with our peers. So yes, that I would strongly recommend. If you're a small bank, you know, reach out and certainly try and join some of the industry working groups.
Thanks so much, Tanya. I mean, Yvonne, AIB as well has set science-based emission targets for now 2/3 of its lending portfolio. Or correct me if I'm wrong, probably there's already some progress happening there.
Yeah.
But maybe can you share a bit more of your experiences on climate action within AIB as well?
Yeah. And actually, sorry, I couldn't hear Tanya during that segment, and I think a couple of people are having trouble there, just to flag that. But I can hear you fine, Johanna. So I suppose in terms of climate action within AIB, so before we set our targets, I suppose we set about, you know, launching products that would help our customers, encourage them to take the different transition steps. So, you know, we have a range of products around green mortgages, green consumer loans, sustainability linked loans, and you know, project finance for renewable energy projects, etc. And setting the targets, so having those in place was really important to kind of set the foundations to work with the business needs to happen. Did you lose me for a sec? Sorry. So just, I suppose they having those propositions in place were really important, because when we started to engage with the business and talk about the pathways of, you know, what needed to happen, you know, they could see line of sight to levers and actions that could be taken in terms of some of the existing products that were out there. So we got advisory support in terms of, you know, working through the considerations and the options, and you know, what these targets would mean as we progressed out over a number of years, and, you know, been working through the options and looking at the tailoring of the assumptions based on, you know, our country, our climate action plan, the typical emissions across the various different sectors. So that has taken kind of 18 months to get us to 75% of the portfolio, and we have just submitted to the SBTi to get those targets validated, and we'll be looking to disclose those as soon thereafter. But just to give a practical example, so half our loan book relates to mortgages. So, you know, the science-based targets, there's a big part of that, those targets that relate to how quickly or how much the energy grid is greened. So how much renewable energy is within that. So, and then the other part is kind of more in our own control, which is, you know, what percentage of A and B energy rated homes do we take onto our books, and then what percentage of mortgages that we already have on our books are retrofitted to those higher energy efficient homes. So there's targets listed out for the business to achieve year on year across those various assumptions and levers. And they have been integrated into our financial plan to achieve that. So I suppose where we're at now is obviously we'll get our targets disclosed, look at how we disclose on our progress, and to be able to disclose on our progress requires quite a big heavy data infrastructure to be able to, you know, track and be very clear around each of those component parts of the targets, but also to be able to adjust that if, for example, the greening of the grid doesn't happen at the same pace as anticipated, that we can change and see how does that impact the other component parts to still get us to where we need to get to, you know, by the various deadlines. So that's kind of the kind of update on where we're at. So happy to take any questions.
I'm tracking, but there don't seem to be any questions on that particularly. And in the end, we might have a bit of time to,
Sure.
you know, take some overall questions. But thanks so much for elaborating, Yvonne. Moving on to another very prominent impact area, and that is financial health and inclusion. And Amanda, you already mentioned in the beginning, is actually the second most prominent impact areas of banks, with about half of the banks having it identified as the area of most significant impact. Now, this, of course, covers a broad range of social aspects that are relevant for banks. Amanda, maybe moving over to you, can you describe what your approach on financial health and inclusion looks like? And also what aspects of inclusion and health you're planning to tackle?
Yeah, it's a great question, Johanna. I mentioned earlier that our ambition around wellbeing, you know, that's one of our two pillars. And I think, you know, when you tie financial health and inclusion to that, you know, they just become so key to driving success, whether it's for our community, whether it's for our people or for our customers. I think it's important, though, to frame the approach that we've taken to both climate and financial health and inclusion by saying that we didn't wait to finish baselining our performance or setting targets, because working out how to measure impact, especially in financial health and inclusion, and what targets can be set can take some time. So our approach was very much progressed through a financial inclusion action plan first, and now we are going back to ensure that those actions are driving the desired outcomes that we need through the targets that we're looking to set and the metrics that we've adopted. I think when you start diving into those metrics, this has been where the true value for us in the working group has come this year. I think through that working group, we've confirmed that our bank's hero metric on impact will be to adopt the financial health score, something that we're now baselining so that we can benchmark and understand our impact across important at-risk customer segments in our country. And I think that national context is a really important you know, consideration here. I think financial health and inclusion in Australia is going to look very different to how it might look in other developing countries, as an example. Through the working group, we identified several core indicators and several optional indicators for both financial health and financial inclusion. Whilst we'd like to be able to measure them all, some of them we just can't right now. And some of them just aren't applicable, again, in our context. We've also identified that there's several metrics that we will continue to measure that perhaps UNEP 5 through the working group didn't prioritise at a global level, but which are really important in our context again. And again, I cannot stress, you know, the role that making sure that national context and the at-risk or the segments or sectors of your society that we measure, it's not just at a whole of bank level, it's, you know, those sectors that we need to focus on the most. Target setting for those new indicators then is the next important activity that the team are currently working through. And from there, we'll pivot our focus back to ensuring that the actions that we identified in the current Financial Inclusion Action Plan are sufficient to deliver those outcomes required, so that we can drive the performance that we want for the targets. At the moment, those actions really focus on innovation and refinements in products, services, and most importantly, in the way we communicate to customers and engage with customers.
Thanks so much, Amanda. And you mentioned metrics a couple of times, maybe just a quick follow-up question, because you have been part of both the working group to develop these indicators for financial health and inclusion, but also part of the framework review where we also developed a set of indicators also for climate. Maybe can you, because I think it's interesting to the audience, explain a bit to everybody what exactly we've done, like what approach we have used to come to these indicators.
Yeah, it's been awesome. And I think the last couple of days we've heard a little bit of discussion. I know there was certainly a panel last night where we heard about the theory of change and the adoption of theory of change as a way of thinking about metrics for impact is something that was pretty exciting for our working group or for our task force, but also for financial health, because it allows us to think about the inputs, the actions, the outputs, and of course the outcomes, and then the impacts that are required for us to affect change. So what do we have to put in? Because sometimes it's easier to measure what we're doing, the actions we're taking, than it is to measure the impact at the end. And the idea, whether in our task force around climate or in the financial health and inclusion working group, is that depending on where your bank is and where your national context is, you might be able to measure today an action-based or an activity-based metric. And you might then put a plan in place that one day you could invest, or you could, take action to be able to improve your data or improve your systems, or, improve whatever needs to be improved. Perhaps it is engagement with customers, so that you can more effectively measure impact or further down that value chain. It was pretty exciting for us because it meant that we could, really understand where we were focusing in financial health. I mentioned that we've got a lot of indicators internally already. What we found is that those indicators were very activity focused, and we had the ability to measure outcomes and outputs, but we just weren't thinking that way. So it's been a great opportunity to really challenge our business on what we should be measuring if we want to drive a particular outcome.
Thanks so much. Yes, and I fully agree with what you said. It was a very exciting process, and now having this theory of change, underlying theory of change for all, it's on the webpage in case you want to see, so please check it out. I think that was very helpful also to guide that work. Just a little comment, because some people seem to be having some audio video issues. So if you refresh the browser tab, then in most cases it should be fine. So I'm just mentioning that in case that happens to you as well. Now, of course, we talked a bit about the very prominent impact areas, climate and financial health and inclusion, but that's not the whole picture, of course. We also have big other themes. I mentioned the triple planetary crisis, also biodiversity loss, pollution, and so on and so forth. Especially nature there is increasing momentum for nature, and we cannot wait, until do first climate and then start with nature. We basically have to tackle all the crises now because time is running. So the question is a bit, what next? So what actions are banks planning on areas other than climate, as well as financial health and inclusion? And also maybe, where, for example, do you in your bank see topics like nature? So maybe, Tanya, I pass that question to you. Can you tell us where nature stands on your bank's agenda planning?
Sure. So I think I was one of those people when they first mentioned, we need to start looking at the task force for nature-related risks. I was like, whoa, hang on a sec. We're just getting used to climate. Give us a chance. We've barely got our head through, this one, and you're bringing the next thing. But actually, when you sit back and think about it, everything is actually based on nature. We actually cannot continue as a species if we don't start incorporating nature into every decision, and it's vital, for the global economy. And then I sat back and I was invited to speak at the JSE, the Johannesburg Stock Exchange, to speak to the launch of the African Natural Capital Alliance. And I thought, oh my goodness, what am I going to say? We're just starting with this. And then I realized that actually, many of us have already been doing things. We just didn't realize how, where they sit and how to frame it. So, I just started with something small, like we started a small project around saving rhinos. There was an immense, well, still is, but this was in 2012, big rhino crisis. We started a small project. Through that, we created a lot of contacts, and through those contacts, 10 years later, we are now able to help through our AML, through our anti-money laundering networks. We're able to help catch those poachers and stop illegal wildlife trade. Now, that's fundamental and critical to preserving, wildlife and biodiversity. But no one was thinking about that. They were thinking about, oh, you're saving rhinos, that's just, a good community project or a good CSI project. But no, the space is so interlinked. A simple example like that is going such a long way. Another thing is through what we call ESG screening. Almost every bank now should be doing some type of ESG screening. And when they're doing that screening, you would, if you were doing it properly, be incorporating nature, impacts on nature and vice versa in any of your activities. So, I'm thinking of mining, I'm thinking of property, I'm thinking of agriculture. You're going to do a new development, you're going to assess that land, what is natural to that land. How are you going to preserve what is there? So, for example, Investec did a big property development down at the coast, and there was this thousands of years old fig tree. And they actually preserved the fig tree throughout the construction and built this property development around the tree, preserving that heritage. And I think it's that kind of thinking that was partly natural, but now it needs to be so much more deliberate. How are we ensuring that we're taking nature into every single decision that we make, just like we are doing with climate, just like we need to do with, human rights, with on the social side as well. So it's, once again, just applying that social lens, that environmental lens, climate lens, nature lens to everything that we do, and a consciousness that our purpose is to create enduring worth, living in, not off society. And it's that we live in this world, not off this world. How are we incorporating that into everything we do?
Thanks so much, Tanya. Maybe Amanda, I know that you had mentioned like a third or even fourth impact area in the beginning. So also the question maybe to you, I mean, what next? What should we be doing? What are you planning to do?
Yeah, it's a great question. I mean, this year we committed to progressing that deeper exploration of biodiversity and ecosystem impacts across the lending portfolios. And our lending portfolios are vastly bigger than our investment portfolios, as I mentioned earlier. Like we're a smaller bank. So not only residential and commercial lending, but what we actually found is in development finance and most importantly, agribusiness, we have a proportionately higher size in our lending portfolio to agri exposure. Tanya mentioned starting small, and I would absolutely reinforce that point. Proof of concepts and piloting really helps here. When it comes back to that earlier discussion we had on collaboration, whether it's learning through collaboration with customers, with peak industry bodies, with other banks, that starting small approach is a great way to start learning. For us, we partnered with the University of Queensland. And for those who are interested, this is in our self-assessment from last year. You can Google it. But they really helped us to undertake that portfolio analysis at a collateral level. So overlaying the critically endangered species and regions and those maps across the geocoded data for our actual underlying collateral really exposed, particularly when you throw multiple critically endangered species, where we had depth in our portfolio and exposure. But what it actually caused is, yes, we can engage with those customers and we can think about those strategies for existing lending. But what it really caused us to do is think about how we're going to engage with new customers, people wanting to do new development in those areas. What's our responsibility to assess and understand what the potential biodiversity and ecosystem impact of development is in a particular area before we lend money. And just like we would have a transition plan for climate or mitigation, whether it's, and in our country as well, adaptation, lots of floods happening in the east coast of Australia. But I think it's also then, how do we start having that? What's your nature transition plan? How are you going to manage those high risk exposures that are in those areas?
Thank you so much. Thanks to all the three of you. I think we can open up for a bit of Q&As, because I've been tracking the Q&A whilst speaking as well. And there is, I'm not going to read all of them. There's a lot of text as well, but like two things I'd like to pull out, because we had like 2 or 3 questions that speak to challenges. Especially smaller banks might have more challenges, resource capacity wise, but also then data. And that I think applies to banks, whatever size they have. So, I mean, who would maybe like to share a bit, how do you deal with challenges? How do you try to overcome them? What's your approaches?
I don't mind taking that one. I suppose from our perspective, we have kind of stood up a systems and data program of work. So I suppose looking holistically at the various pieces of work where ESG data is required. So, you obviously have data that's required for ESG risk assessment as part of loan origination. There's data required to be able to categorize lending as greener transition. There's data required for disclosures. There's data required for the emissions reduction tracking. So, and obviously there's, Pillar 3 disclosures all been layered on top of that, as well as EU taxonomy. And there's some overlap, quite a bit of overlap, but then, it brings like a quite expansive set of needs, and also using some of the existing data that wasn't, I suppose, used in that way previously, now has, garnered greater importance. So we have kind of come at that holistically to see how we can capture that in a way that I suppose we can stand over it. And that's going to be a journey. And where we don't have the data, we are using proxies. So proxies are a big feature and have to be, because if I take, for example, 50% of our loan book relates to residential mortgages, but actually only 40% of homes have an energy efficiency rating. So even if we had all that available data, we'd still have a big gap. So we have to kind of derive what we think is the best estimate, but do it in a way that we feel is conservative and not overstating the position, and always kind of be prudent in terms of the assumptions that are taken. And it is going to be a journey, and it's going to be a combination of looking for external sources. And we're probably limited from an Irish perspective in terms of the maturity of data providers. So we are having to kind of figure a lot of it out ourselves. But it is, I suppose, about trying to expose that out as much as you can, even if it's not perfect and the regulator doesn't expect it to be perfect, that you're exposing it out and showing where you have gaps, or showing where you've used assumptions or proxies, so that you're saying, okay, we're trying to increase the awareness and understanding, while in parallel we're looking to build out the data quality. And I think that's the approach that we're taking.
Thanks so much. We only have like 1 minute to go, so maybe one quick last question, and that is a question that said to Tanya and Yvonne, maybe one of you could respond. Now, the question was, what buy-in would you say you have throughout your organization by now?
I don't mind going. So buy-in, I think the buy-in really for us has been dictated by the support and tone from the top. So we have a really passionate and committed board and CEO, and from the get-go, they have made it very clear that this isn't about doing and just enough. This is about trying to lead and, the transition. And, so people have got on board and are actually quite energized and enthused and motivated by the purpose of playing our part. So that's been our perspective.
Thank you so much, Yvonne. And with that, I'd close this panel now. Thank you, the three of you, for attending, for participating, for sharing all your experiences and insights. I found it was very interesting. And thanks to the audience for attending and joining. Goodbye and take care, everybody. Bye-bye.